going on, guys? Welcome back. Today's episode is going to be strictly focused on premium selling. If you're not familiar with premium selling, well, you're in the right place. So today, the markets, let's take a look here. It just rebounded, which is amazing to see. It's finally some good price action on the upside. I don't know if this is the bottom or the beginning of a bottom, or if we're going to make newer lows. Yesterday, the market did perform in a similar fashion. However, it did give up the gains very quickly. As you can tell, it bounced up and then just went down all the way. Now, today, the market's actually holding up the gains, which is pretty interesting to see. We are in a critical level here of SPY being crossing that 370 level. However, Apple has not been doing well today. And because of that reason, I'm not sure exactly what the market's going to be doing. It has something to do with Russia. I'm not going to go cover Apple in detail, but if it wasn't for Apple, I'm pretty confident we would have probably broken 370 today. Now, that being said, the stock market's doing well, comparably. Now, is it easy to make money in this market? Absolutely not. It's actually really frustrating. I mean, just take a look at this chop here. It's just insanely frustrating. It's really hard to make. Now, I am going to cover in detail on the portfolio. You guys take a look here. The portfolio is up 6.25%, right now. And we did make some plays today and yesterday. We've sold Beyond cover calls, we sold Roku cover calls, and we sold AMD cover call. And we're going to cover that in just a moment. Now, let's take a look at the markets overall. It's just pretty interesting because yesterday the markets did open up in the highs and it just faded away. Today, we're basically back at the levels of yesterday and we're holding up. The price action is much more solid today than it was yesterday. Now, again, things can change. The markets, it's 1:45 p.m. right now, so anything can happen. But I think the biggest catalyst coming up is the jobless claims report. That can be a market mover. I don't expect too much volatility, but it can happen where, the market can get clapped 2 to 3% and make new lows. So that being said, I did make a spreadsheet on the plays that we have and what we did. And basically, we own 3 different stocks right now. We own AMD, Roku, and Beyond. We entered Beyond with a covered put. We sold a 17 put for 70 cents credit. So our break even on Beyond is 16.30. We bought Roku and AMD. We averaged down slowly, building to 100 shares. AMD's entry cost basis is $76.30. And in total, since we started the portfolio, we've collected $190 in AMD, $200 in Roku, and we collected $57 in Beyond. So that being said, guys, take a look here. These are the cover calls here: Roku, Beyond, AMD. Anytime you see a minus sign, that means we sold these contracts, which are cover calls. Now, let's go back to the spreadsheet here and take a look here. So our break even on AMD with the premiums collected is $74.40. Beyond is $15.73, and Roku is $67.65. Now, let's assume the market does really well and we lose these shares. Now, we have a max profit on these plays. Now, that being said, our max profit on AMD, if shares get taken, is $60. Beyond is $27, and Roku is $35. Now, it's very unlikely that these shares are going to be taken in the next 2 weeks, but it could happen. The market could just have a parabolic run and we lose these shares, and that's okay because we will profit on them anyways. I hope you guys are familiar with this. If not, basically, when you sell a cover call, right, what you're agreeing on is selling the shares at the strike price. Now, let's take a look at the alerts that we actually sent out on the portfolio. If you take a look here, we sold Roku 68 calls today at $1.70. And we sold, correction, we didn't sell them for $170. We tried to get a fill for $170, but we actually sold them for $165. And they're doing pretty good. If you take a look here, I believe the play is up. Let's see, we're in profit. It's at 148 right now. So it's a decent profit, nothing much. But again, the point is not profiting. The point is letting these contracts expire worthless and we collect the full amount of premium. Or when they reach that 90-80% decay, we can trade them and re-enter a different position. Bounces or whatever happens in that aspect, we can definitely sell more. So you can definitely day trade your portfolio once, again, we have to reach that 25,000 mark area so we can avoid that pattern day trading pattern thingy that everybody hates, right? So again, the only way you can avoid that is definitely just having 25K. So we will get there eventually, slowly. I'm not gonna make huge deposits. I actually haven't made a deposit this whole entire week. I made a smaller deposit last week. So again, I'm trying to do this in a way where everybody can do it, right? I'm not gonna make huge deposits, small deposits. And overall, the portfolio is down, unfortunately, because of the markets. It just got crushed. So we started this at September 13th, and within that time frame, take a look at the markets. Let's look at a month. September 13th is right about here. So again, the markets did fall 7-8% since we started the portfolio. So it's almost impossible to recover those losses. But again, the markets will continue to chop around. They will go up and down. It really doesn't matter. Yes, the portfolio is down. However, we're still collecting premium, so our buying power is actually increasing as time is going on. And we're actually looking at a few other stocks. I did mention this on the channel as well, that I'm looking at adding some Fubo stocks and some Fastly shares. Again, today was a great day for the stock, so I decided not to add these shares. But again, let's take a look at Fubo real quick. Now again, Fubo, we've traded this a few times before, and it's been, it's just been a wreck. I can grab them here, but I just rather not. I'm gonna wait. Fastly, on the other hand, does look very tempting here. I may get these sooner than later. Again, it did hit a 52-week low not that long ago, a couple days ago. It has rebounded slightly, so again, it's an option. The shares on this is $8 and Fubo is like $4. So basically, to own 100 shares in these stocks, you need like $400 to $800 per 100 shares. And you can actually start selling these cover calls on these stocks. Now, again, these stocks are highly volatile and they have the tendency of going up and down and in big moves. So it's very risky. But again, we're not using a large amount of money to buy these positions. Just a couple hundred shares. Maybe I'm going to start off with 100 shares and kind of see how it goes. Again, put 100 shares of Fastly here. It'll cost you $800-900, and you can collect $30 to $40 a week in premium, which is pretty good if you consider it. But again, there's a lot of names here that you can definitely start with. I like AMD because I know AMD is not going to get clapped 30-40% in the next 2-3 weeks, right? But these stocks can definitely do that. So it is a high risk. Be careful with that. Don't recommend using margin on these type of volatile stocks because again, you have the likelihood of getting a margin call. So as the portfolio starts profiting, as these premiums start adding up, right? We made $190 in AMD. Basically made like almost $500 in premium since we started 2 weeks ago, which is amazing. Nothing crazy, but again, slow and consistency wins the race. And what's going to happen is these premiums collected are actually lowering our margin costs. And we're going to stop actually using margin very soon. As soon as the portfolio is established and we can afford to buy more shares without margin, just using the premium to keep adding, averaging down, adding costs, opening new positions. But again, guys, this is the way to go. This is consistent, it's reliable, it's a good stream of income. Just take a look here. So imagine that counts at 5K, right? So imagine if that counts at 500K, right? Now that sounds unrealistic for most people. Like, wow, I'm not gonna get 500K. Of course you're not right away. But if you're adding again $200 to $300 a week, and you're consistently adding more shares, consistently making deposits, you can achieve these numbers in a relatively short period of time. I'm not saying that you're gonna make $500,000 in a year or 2 years or 3 years. It could take much longer. It really depends on the market conditions. But again, it's a solid way of investing. You don't have to buy, calls and puts and hope and gamble that the market's gonna go down or whatever it does. It doesn't really matter. When you sell premium, you're relaxed. You don't really care as long as the market doesn't make an irrational move. And if it does, you can hedge these positions as well. Now, earnings season is coming up very soon. What's gonna happen is Roku, AMD, Beyond, they're all gonna report earnings. And what we're gonna do is the premium that we already collected, we're gonna hedge our positions. We're going to sell cover calls way above our break-even price, and we're going to use that money to buy puts to secure our investments. So again, earnings season is fun, but again, I don't want to risk the portfolio going down 20-30% because Roku had a bad earnings. We don't want to be affected by that. So I will give up some of the premium by hedging, but again, we're going to get it back by selling cover calls. Now, worst case scenario is we lose the shares, we make a decent amount of money, and we find a new position or we re-enter it back by selling cover puts. But again, guys, that kind of sums up premium selling. If you have deeper questions, make sure to follow us on Instagram at SellTheDips. Again, go to our website, sellthedips.com, and you can check out our Instagram profile, our trading records, our alerts, anything that you want to see, we have it. We're fully disclosed. We don't hide anything. But again, guys, any questions, put in the comments, like, subscribe, do something. Let us know if you're interested in something like this. I'm trying to find an audience for this. I know many creators, they don't really talk about the strategy that I'm applying here. We are using the wheel strategy. However, I'm not using it initially. I'm not 100% using the wheel strategy. Basically, I'm not entering these positions selling cover puts. It just doesn't work that well because the stocks are already kind of slammed. I'd rather just buy the shares and sell cover calls and start collecting premium immediately. But again, guys, thank you for watching. I appreciate you. Have a good one, and I'll see you guys tomorrow.